Good morning, welcome to Nifty Prediction. My name is Narendra and this video is only for education and learning purpose. If you want to buy anything, please consult with the financial planners before buying. Before going to the Thursday's prediction, I would like to review the Wednesday's closing. Nifty ended up in the positive 18,315.10, 49.15 points in the positive 0.27% in the positive. Pre-opening was in that 18,313.60, which is in the volatile zone. In between those two levels only Nifty has opened in between. um, it has opened below the overall average. Initially it was kept the overall average high as a uh, perfectly matched in the morning, this particular overall average high, so that it has started to fall down towards to the lows 18,002 11. It was kept this particular support level too as a perfectly low matched minus 10 points. It was not broken because our rule is for the buy minus 10 points and for the sell is plus 10 points for any level. So minus 10 points when it gives you 18,208, so which was not broken. It has kept in between that level so that it has recovered once again and started to go towards the bullish and broken this particular level once again on the latest stage. Initially, which is kept around 18,323 is a high. Then later stage it has started to break and closed in the high and little from that high, because even the high is also not broken this particular overall average stop loss of plus 10 points, so that there is no new target has opened from that level, so it has closed in the below, little bit below that level. That is where it is. So it is struggled a bit yesterday, as we expected, because of evenly opposed means it still has potential to struggle because of if it is goes 33% the flat, it is kind of a flat only as well. Let's go to the prediction for today on the data, which shows that we have one bearish warning signal, which means normally bearish warning signal comes means the fake fall will happen and then started to go bullish 80% of the time. So that one put option buy on dip method you need to keep as a hero zero. Remember, it is must have to be in the hero zero method, because 20% failure ratio is still there. And it is F&O closing day, so that if it is not recovering that much and if it is small recover and then started to fall down means we should not suffer. So even though still 80% of the time it's fall down, fake fall down, then goes towards to bullish, we still need to trade one call option as a hero zero method. So 80% of the time the call option will give you somewhat result, but this must have to be taken as a hero zero. So buy on dip method, one call option you need to buy as a hero zero as per one bearish warning rule. So initial fake fall and then start to go bullish, and we have these targets in the positive side as well. So 18,361, up to that level we can focus initially first, then later we still have positive side target which is around 104 point, which is 190 points, 18,505. Up to that level we can take risk on that hero zero, but still certain levels we need to watch out. If high is matching any of these levels, we have so many resistant levels, so that any of these levels if high is resisting, then it might fall down, so at that time we can book profit. And we have one volatile indicator as well, with two bullish and one bearish signal, so that whenever volatile comes means we must have to go with the hedging method. So the best way to go for a combination, even though if you are buying 10 points as a hero zero in the call option side, one put option is also advisable to keep as a hero zero in the put option side as well, equally 10 points. Why? Because the volatile indicator will give you some chances to go down if certain levels are not breaking. For example, volatile level stop loss of bearish, this particular plus 10 points not breaking, then once again the fall down will happen. So that is the reason. Because of one volatile came means we must have to go with the hedging method. So one hero zero in the call option side, you are making 10 points as a hero zero buy on dip method. then one put option as a 10 points also is advisable to take due to the F&O closing. It might still go down to negative side. So the volatile one, anything above this 0.45%, 82.42, 18,397 above anything pre-opening means Nifty is in the bullish zone. So you can buy one call option as a hero zero, and volatile two, anything below 0.10% positive, 18 points, 18.32% positive, and 18,333.42 below this level pre-opening means you can, it is in the bearish zone, so you can buy one put option as a hero zero. Anything in between the volatile one and volatile two, or in between pre-opening means that is in the volatile zone, so you can buy one, I mean buy combination. So hedging method is advisable to go if pre-opening in those levels. And volatile stop loss for the bearish, if this particular level plus 10 points high is not breaking, then Nifty has potential to fall down. Likewise, the same volatile stop loss for the bullish, if low is not breaking minus 10 points from this particular level, then Nifty has potential to go bullish. So note on those high and low whether it is breaking or not. And the resistance level 1 and support level 1 rule, anything Nifty is not breaking the low minus 10 points from this particular level, then Nifty has potential to go extreme bullish. And resistance level 1 high is not breaking from this level plus 10 points means then Nifty has potential to fall down heavily towards to bearish. So extreme bearish is possible because of the support and level one rule and resistance level one rule. But still, Nifty has potential to keep high on any of these resistance levels plus 10 points may also chances. At the same time, the lower side is also having chances to keep resistance levels minus 10 points stop loss. You can keep and buy. These are all the basic rules. Any levels you can buy minus 10 points, any level buy sell you can plus 10 points with the stop loss of those resistance levels. So that those are all the basic rules. And we have a positive side average which is 190 points, which is 18,505, and negative side is not much bigger number, 90, sorry, 69.60 points, 18,245 only. So that the positive side we're having big number, but still we need to play with the hedging method due to volatile indicator. So volatile indicator comes means it can keep any level high, any level low, and go towards to uh, from any level to any level because of the volatile indicators. If it is matching, then it can reverse from any level. So play safe. And as per the par value rule, anything below the par value 18,460.39, if you will try to come down towards 18,122, it is showing. But as per the volatile rule, positive target 2 to negative target 2 we used to trade, which means 272 points in the positive to minus 38 points as per the volatile. But still, if pre-opening is below this level, then Nifty still has potential to go down further towards low. So that is what we need to go for, a 1 PE as a hero zero with 10 points. So edging method is advisable. That is why we are taking those small hero zero also combination. And uh, as per this indicator, which is 18,393 below pre-opening means Nifty will struggle. That is what shows yesterday like that. It still has potential to go down. Even closing numbers are in then flat negative or flat, complete flat. And even in the negative numbers is also not big, around minus 52 points. It shows that if pre-opening is below 18,380 means Nifty will struggle, it shows. But if anything breaks this particular level, average level, which is 359 points, but still if it is goes bearish side, it can go up to any level because we have pending target downside in hand. Anything below 17,955 means it will free fall towards to any level because we still have negative side target which is in the range of 700 to 750 range, which is 17,597 to 17,548. So that downside is wide open. So keep one small put option always in hand, 5 points. Even if it is fails, don't worry keeping it in hand. If it is goes bizarre bearish, it might give you enough profit. And the closing numbers, expected closing numbers, which shows that in the flat finish itself around positive around 44 points to 51, which is 18,359 to 18,366, and flat bullish is showing 18,425 to 18,434, which is 110 to 119, and mid bullish is showing 18,439 to 18,447, which is uh, 124 to yeah, 124 to 132, and bullish is showing 18,502 to 18,529, which is 187 to 214, and extreme bullish is showing 18,556 to 18,592, which is 242 to 77, and the flat bearish is showing 18,310 to 18,315, which is complete flat minus 4 points to complete flat 0.29 points. Mid bearish is 18,298 to 18,303, which is 16 points negative to 11 points negative. Bearish is showing 18,274 to 18,286, which is minus 40 points to 28 points in the negative. Extreme bearish is showing 18,225 to 18,240, which is negative 89 points to negative 74 points. So the key level we need to watch out is that 18,362, which is 47 points to 48 points in the positive. So this is going to be a key level. If Nifty is trading above this level, we can expect a positive closing. Nifty is trading below this level, we can expect a negative closing. But once again, we need to go with the edging method due to the volatile indicators came. So Nifty still has potential to go extreme bullish as well. So play safe. And even this particular data is also having the same kind of key level. So you need to watch out these key levels, which is 18,350 to 18,360. 10 points difference is there. So this is going to be a key level today. And let's go to the summary. So as per this volatile comes means we need to go for hedging method. So we need to go for a euro zero in the call option 110 points and put option 110 points. Must have to keep in hand today. This will give you handy because of downside target, which is heavier in the negative around 17,597 to 17,548, but we still have positive side target, small target in hand. But why we are keeping volatile? I mean, hedging method in the small 10 points, which is positive, which is bigger 190 points, but negative, which is 69 only. So it might go towards the bullish, but we have pending target, which is in the big way. So that is the reason 110 points put option is will be handy. And as per CPR, it is bullish CPR, but still it might close in the negative. So if you're a high risk traders, you can buy 250 points gap in the put option and call option combination. For example, if Nifty is opens in the range of right now 18,315, so if pre-opening is somewhere in the range of 18,350, like that, if pre-opening is there means you can buy combinations of 250 points gap, which is call option side and put option side. You need to keep some 250 points gap, so you can buy 18,200 call option CE, and it gives you 100 points higher, so 18,450 put option. This combination will give you some good results. So this hedging method you can go for the high risk traders. Let's see how the market is going to give us on Thursday. Thank you.